Good morning. This is Daniel Green. I'm always looking out for my clients, trying to find benefits. And one of the things I'm seeing happening more and more are talks and lawsuits regarding the COVID-19. Everybody from, if you're a landlord, you're getting sued by your tenants. If you're in a partnership or a business, people are trying to sue the businesses, and from employees to clients to competition. And so I'm I'm looking at ways to protect you. And I've been, I go to seminars and all that all the time. And meet attorneys that have this complicated structure. Let's put a Nevada corporation together, and then it's going to own this, and then it's going to, you're basically putting this in and putting this in, and you got to go behind your back and do this. Very complicated. I've got a colleague that I work with that has a structure that is much better. I've known Cherif for a while now. Probably 8 years. Let me introduce you to him. His name's Cherif Medawar. Cherif, introduce yourself and tell him a little bit about what we've got going here.
Thank you, Daniel. So my name is Cherif Medawar, and I'm a real estate fund manager. I'm also an educator, and I've had an education company for over 20 years, showing people how to make money in real estate mainly, and how to actually protect themselves and their assets, and how to reduce taxes. And I think that's how we connected so well, you being an expert CPA who worked for the Franchise Tax Board in California. You've been on the dark side, like you say. And that's why we connected. We've been good friends for 8 years. So thank you for having me here. Thank you.
Yeah, of course. I mean, like I said, it seems that the problem is the asset protection strategies are always complicated. Multiple entities flowing money back and forth. And, this entity owned by this entity, owned by this entity. Problem is that gets expensive. I mean, I've seen multiple entities, they've got everything from series LLCs and things like that, each one is $5,000 to $10,000 to set up. And then you've got the ongoing fees. Tell a little bit about your structure and, number one, how simple it is. Number two, how it really protects versus, getting the veil pierced and all that kind of stuff.
Okay, great. So the structure is very basic because there is actually no need to transfer any assets out of your name. There is no need for a lot of LLCs. So let's take, for example, an individual who has a home and maybe 3 investment properties, one in California, one in Florida, and one in Wisconsin, let's say. And they also have a business. So that person is worried because maybe their net worth is over $1 million between the equity in their home, the 3 investment properties, rentals that they have, and the business. And that person, if he or she gets into a car accident by some bad luck, or maybe they have some teenagers at home that drove and had a car accident, the person who got hurt will go to an attorney who will actually search for assets and how much equity that individual has. And they're going to see the home they have and the rental properties and the business, and they're going to establish very quickly, within seconds actually, because there are some websites and some tools right now on the internet that can establish, okay, this person has maybe debt of so much and equity of $1 million. So they may then sue for a couple $1 million. The $1 million that is the insurance coverage that the person has, and the other $1 million of equity. And that's just the specialty that the attorneys who are litigants representing these people can do very well. And what we do is actually not complicate this at all. What we do is we see how much equity there is in each property and in the business, and we actually record liens against these equities. So in fact, we strip the equity. And the way to do it the right way is to set up a Wyoming LLC, which we do for the clients. We actually record liens to actually fund the Wyoming LLC. As you know, as a CPA, when somebody sets up an entity, they get a tax ID, and then they have to fund it. They open a bank account, which you can do virtually. We even help them with that. And then they're supposed to capitalize the entity or fund the entity. You can fund it with cash or with an IOU. IOU, I promise to put $1 million. Then we create a promissory note. We create liens that could be recorded against each property. And those are either mortgage liens in judicial states or trust deed liens in the West Coast for non-judicial states. So what ends up happening, the person that has, let's say, a property worth $500,000 and they owe $250 to the bank and they have equity $250, we record a lien for $250,000 against that property. And the lien will be a promissory note to pay $250,000 to the Wyoming LLC. So that lien is approved in the United States because there are different types of liens that are approved. There is the lien that you get a loan from the bank, so they record a lien because they want their money paid back with interest. There is a lien to actually capitalize an entity, which you say, I'm going to put that money into the entity, and now, because I'm not putting it right now, I'll pay interest on the money I owe to capitalize the entity. And that's how we do it for the real estate. When it comes to the business, we record the UCC1, which is Uniform Commercial Code 1, which is just a loan, a lien against the business. And if they have equipment that's expensive, like a friend of my wife, she has a business in San Jose, California. She had a piece of equipment that was over $1 million machine, and she said she was going to have a dispute with an employee. She was afraid they go after her equipment and have her sell the business, etc. So we actually recorded the lien against the business, Uniform Commercial Code. We do that, and we actually put the serial number of the equipment. So now, if she gets sued, what ends up happening, if God forbid, that person now hits somebody that's, let's say, riding a bicycle, and now that person is hurt, and they're suing for millions of dollars, the litigant's attorney will actually look and they will see the assets, but they will see no equity. There's nothing to go after. So they're going to have to settle with the insurance. And even if they win the case, they still want to pursue it and they win the case, and the judge gives them a charging order, there is nothing they can do because they can collect from these people, because if they force them to sell the assets, the bank is going to get paid and the actual Wyoming LLC will get paid. So there is nothing to distribute to the person who won. Actually, what they will end up happening is not only they will win the case and not collect a penny, but they will have an IRS bill, correct me if I'm wrong, called phantom income.
Yeah, I was going to say they collect a, if you will, a K-1 or a 1099 that says they receive, that they're taxed on this, but they never receive the money.
Exactly.
If I'm going to be taxed, I want to be able to use the money.
Exactly.
Yeah, absolutely.
So the fact that we strip the equity makes the litigant settle for whatever we offer or for whatever the insurance we have. And actually the Internal Revenue Code is 77-137 that says, hey, you received a judgment, you didn't collect, that's not our problem, you have phantom income. So the person will actually become aware early on that there is nothing to go after, because their lawyer is going to say, I'm not going to go after this person on contingency. You better give me a retainer of X thousands of dollars, because even if you win, you're not going to collect anything. Let us just deal with their insurance and settle quickly. So that structure makes it so simple, because within 72 hours of a client calling us, and you know, we've helped some of your clients, Daniel, before,
right.
And the way we do it is we tell them, tell me how much you have equity in all these assets that you have. We get the proper addresses of the properties and all the information. We have the legal department that we work with. I have 2 in-house attorneys. We also have a legal team that deals with this. We do the actual Wyoming LLC structure with a great operating agreement that has 13 business reasons why it exists. It's not just for asset protection. It just say like to consolidate family money, to make future plans with the family for all the finances that come into the Wyoming LLC, etc. And when we do the operating agreement, we also draft the promissory notes and the liens for each property. Each lien is different. You know, you have certain requirements for California versus Wisconsin versus Florida, etc. So it's very particular for each individual with special amounts based on their equity and with their business. And we send them all this by email, the certificate of ownership of the Wyoming LLC, the operating agreement, the liens, they print them, they sign them, they send them to the county, and they record the liens. And what ends up happening, we also help them set up the bank account, the online bank account for the Wyoming LLC. And so what happens is now they have a lien of, let's say, $1 million on all the properties, and it's held there owed to the Wyoming LLC. The Wyoming LLC does not need to register in any of the state because it's not doing any business in any of the states. It's just owed money, number one. Number two, it's a tax neutral entity. I mean, speaking of taxes, because they're gonna make a payment, so that's a deduction from their bank account to the Wyoming LLC, but then it's a flow through entity. So it flows through back to them. So here is a debit and a credit, so it's a tax neutral.
Right.
And I'm sure you know, the Wyoming LLC will just have to do informative filing. So there is no like major tax filing, etc. So it's a very simple structure that actually has the reason for its existence, its own tax ID. And let's say it's $1 million debt. They don't have to make a monthly payment. Let's say we put the interest at 6%. We usually put it at 4 or so, but let's say it's 6%. For simple math, it's $5,000 a month, $60,000 a year. That's 6% interest. They don't have to make $5,000 a month payments. We write in the promissory note, minimum one payment required every 12 months. So they make one payment from themselves to their Wyoming LLC, that's $5,000. And when it sits in that bank account, they can make payments from it. They can pay the property taxes, the property insurance, and all this is their account from one to the other. It just really literally flows back to them. So
it's taking money out of one pocket and put it in the other pocket.
Exactly.
And there's no tax liability, but there's the asset protection.
Exactly.
Yeah, absolutely. And you've done that with a number of my clients.
Yes.
I mean, the item I like about it is it's structured in 72 hours. I mean, in California, if we set up an entity, it's weeks.
Yes, yes.
You know, it's 4 to 6 weeks to get an entity ID number and all that.
Yes.
And again, the asset protection structure is fantastic.
Yes, yes. And I want to add, usually the question I have is, why Wyoming, Cherif? Why not?
Why Wyoming?
Yeah, why not Delaware? Well, Wyoming has a couple of things that are amazing. Number one, it's standard with the Wyoming LLC, you have a privacy. So for anybody to find out who actually owns this Wyoming LLC, they have to get a court order, a subpoena, serve the registered agent for them to disclose that. And frankly, we're not hiding. I mean, we can say, yes, I am the actual owner of the Wyoming LLC. There is nothing to hide. We set it up, it's legal. If to capitalize it, it's legal. This entire process is done correctly. I even interviewed several judges on the website kmagb.com, which is kissmyassetsgoodbye.com. It's kind of a clever name. People won't forget it. So the initial kmagb.com, or they can write kissmyassetsgoodbye.com. They will see interviews with different judges, one from Texas, one from the Circuit Court of San Diego, Judge Landers in Southern California. And they say this is by far the best structure because Wyoming not only has the privacy, but it also has a Charging Order Protection Act. Charging Order Protection meaning somebody wins a lawsuit against you and they want to collect, they can get the judge to give them a charging order to enforce that. So they can force you to sell the assets. Well, guess what? Because the liens are with the Wyoming LLC, Wyoming has a charging order protection. So if they go to Wyoming to serve that, the actual charging order protection for Wyoming code is 1729503. That is so powerful. Wyoming they started the actual LLCs in the United States. So all their laws protect us when we set up there. It's easier, it's less expensive, it has privacy. We even suggest for the clients when they set up the Wyoming LLC, when we set it up for them, to make the ownership a living trust. A living trust by default is a revocable trust. That means now it's a form, and what we do with that is they just say, okay, so the Wyoming LLC is owned by the living trust. We send them the paperwork, and now they actually fill out that. Like for mine, it's owned by my wife and I. God forbid something happens to me, it goes all to her, all the assets. And something happened to us, it goes to the kids. Something happened to all of us, it goes to my sister, my brother, etc. And we notarize that and keep it in a safe place. It's a very, very simple, extremely powerful setup. You know, when I thought of this, by the way, you know, I do a lot of educational events and I'm a real estate fund manager, I have big exposure. I started thinking, my gosh, I have hotels. Somebody can slip and fall and sue me for millions of dollars. I own a lot of buildings in Old San Juan, Puerto Rico. This is like 80+ million inventory of properties. We have in the real estate fund over 100 million of assets. I said, I mean, I'm really exposed. How can I not hide? I mean, forget these anonymous structures and all this crazy stuff. How can I not hide and say I'm right here, but nobody can actually sue me? And if they sue, they get hurt. And that was the best structure we came up with.
Yeah. No, this is a fantastic structure. Like I said, we've done it with a number of clients. And so how do people get a hold of you and proceed on this?
Okay, so
should they contact me? Should they contact you? I think it would probably be better for them to contact you.
Yes, yes. Ideally, they contact our office at 407-574-6884. Again, 407-574-6884. They can also go to info@kmagb.com. And if they go to kmagb.com, kissmyassesgoodbye.com, they will actually see a little animation video. They will see how to get a hold of us. There is frequently asked questions that we actually have right there on the website. We try to make it very transparent and very clear.
Can you play that video for us?
Oh, happy to. Let me see here. Let me see as I maneuver around this. Yes, here we go. You see my screen, right?
Okay. I can see your screen.
It's less than 3 minutes. I'll go ahead and play.
Steve has a nice home, 2 rental properties in different states, and owns a small business. He wants to protect his assets from any potential lawsuits and losses. So he calls a company called Kiss My Assets Goodbye, KMAGB. KMAGB's team sets him up with the ultimate asset protection structure within 72 hours and gives him peace of mind forever. This is how it works. 1. We set up an LLC in Wyoming for Steve with a separate tax ID and an online bank account. 2. We draft a powerful LLC operating agreement with special clauses for business and legal reasons. 3. Instead of placing cash to capitalize the LLC, we pledge the equity of the assets by drafting some specially worded promissory notes equal to the amount of equity he has in each asset. 4. We then prepare separate mortgage liens and record them against each property. A separate UCC-1 gets filed against his business. 5. With each lien recorded against each asset, there is no equity showing for any litigant or for any of their hungry attorneys to go after. 6. Steve even transfers his personal cash and trading account under the LLC's name and places the LLC ownership under his living trust to avoid probate. 7. The Wyoming LLC protects Steve and his assets from any lawsuit charging orders based on Wyoming LLC Protection Act number 1729503. 8. If any litigant still sues Steve and wins, that litigant will not only be unable to enforce any charging order against Steve's LLC, but such litigant may also receive an IRS bill under Phantom Income Rules, Revenue Ruling 77137, for the amount awarded to him or her by the courts. 9. This fact makes KMAGB's structure the ultimate trifecta in lawsuit avoidance, asset protection, and asset preservation. Go to www.kmagb.com and email us for a confidential no-obligation risk assessment to show you how this ultimate asset protection structure has also zero impact on your taxes due to the disregarded entity status of the LLC as per IRS rules. This asset protection structure has proven to be the fastest and least expensive way to get set up, the most flexible way to operate, and finally, the least complicated way to cancel it, unwind it, or pass it on to your loved ones. Contact us now at www.kmagb.com, and soon you can tell any litigator, kiss my assets goodbye.
So, you see, I tried to put it in that video because it's within 3 minutes, people get the idea. I mean, there is just, all we need from a client is to tell us, okay, here are my assets. There's a two-page forms that they fill out. And then we turn it over to the paralegal department. They kind of put the whole thing together, send it to the attorney, and then we finalize everything.
Got it. In 72 hours.
Yeah, 72 hours. From the day we get all the info, 72 hours later, they're set up. They have the bank account, the tax ID, the LLC set up. We send them all the documents with the certificate of ownership, and it's very easy to set it up. And now, so they have now, let's say, the 3-4 properties in there. And in case they want to sell one property, let's say, when the escrow or the title company calls them and says, hey, listen, we have the loan to Bank of America as a first lien. There is a second lien to some Wyoming LLC, and it shows $250,000 there. What's the payoff amount? They can actually forward the email of the certificate of ownership, say, I am the owner of the Wyoming LLC. The payoff amount is 0 because this was to capitalize an entity for that amount. I'm not going to capitalize it for that amount, so just remove it. It's tax neutral. There is no tax impact because they were going to put money. They didn't put the money. So it's just awesome way to do it.
Perfect.
Yes.
Perfect. And you know I'm going to ask because you know me. So if they come through as my clients, there's like a discount, or you're going to help them out more.
Yes. We actually have been thinking about what we'll offer them, and we'll offer them 2 things actually. We're going to give them the living trust for free, totally free. We usually charge $995 additional for that. And we will also include the first lien. So we will set up the whole thing usually at its $10,000 because we do everything for them and it's very specialized. It's not a template work, but we'll charge $4,995 to set it up from A to Z, the whole thing. And we will include 1 lien. Each additional lien is usually $695. We'll just charge them $545. So your clients will save on the structure. It will be less than $5,000. We will include 1 lien, and any additional lien, let's say they have 5, 6 properties or whatever, will be just $545 instead of $695, which they will see even on the website. It will be $545, and we're going to throw in the living trust for free. So your clients will come up way ahead. Yes, and remember that all they need to maintain from that point forward is 1 Wyoming LLC. 1, which is $350 a year. That's it. They're set up for life. I set it up and I have 31 commercial buildings and I have 1 Wyoming LLC. It strips the equity on everything. I never had to transfer assets outside my name because, you know, I have properties in San Francisco. If I transfer assets out of my name, it will immediately trigger a tax reassessment. It can trigger a due on sale clause. And then having like some attorneys, we set up this, like we came up with this several years ago. We have over 200, 300 clients now that are set up like this. Never anybody had any lawsuit or any problems. But before, these clients found out that when they went to attorneys, attorneys would tell them, oh, let's set up separate LLCs for each one of your entities and each one of your assets. This way, if you get sued in one, it's just what equity you have in that LLC. And it's just like, oh my God, just to maintain these LLCs every year is a huge expense. Right now, you set up once, it's lower than anybody else's cost. It's very clean, very easy. You go to the title company, there's no ongoing fees. You go to the title company, you're in full control. Like for me, my wife is not involved in all the assets I have. Something happens to me, she doesn't want to go into what? Nevada Corporation set up with a nominee that goes over here, that goes over there. Mine is very simple. She's got the certificate of ownership of the Wyoming LLC right there online. And she can cancel them. She can sell the assets, total control, all in one place.
The only downside I see against this, Cherif, is now all of those LLCs that people set up don't need a tax return. So I'm taking money out of my pocket, my friend.
Well, because you're an honest man. I know you. I know you always have. You know what integrity is what you do, which is telling them the truth, even if it hurts you. And that's what I love about you. That's why I love working with you. And I know you're a family man. You've just been great for me, for many of my clients, also in my education company and investors. So this is what I like about you. So thank you for fully disclosing that.
And that when I think of Cherif, the first thing that comes to mind is integrity.
Thank you. You're
and
kind.
also genius, but
Thank you.
integrity. So thank you.
Thank you
This
very
has been
much.
fun. Let's do this again.
Yes, let's do it. Let's maybe talk about some other great products like the investment, like the SFI fund or the Mix-It
Yeah,
fund. We can talk about
absolutely.
these.
You know what?
All
I'd
right.
love to do that. Thank you, Cherif.
So,
This was
so we'll have them reach the office,
Great.
407. May I close with that?
Yeah, of course.
Yes, sir. 574-6884. 407-574-6884. And when you contact us, just say, I am a client of Daniel Green, CPA. And everybody in my office knows Daniel very well. He's been with us 8 years, and we've sent him many clients that are very happy. Just his tax strategies are amazing. His sense of organization and priorities are just phenomenal. So we're happy to help you. We'll be very happy to serve you. And thank you all. And thank you, Daniel, for your time.
Thank you, Cherif. I appreciate it.
All right. Take care.